Welcome in, everybody. This is the new segment. It's the weekend recap that'll happen on Saturdays, just to catch up on all the stuff that has brewed in the last week and also the impact for next week. And there's crazy things going on. And I want to thank the mods in the chat. Thank you, T&D. I want to thank the mods. I do. Good. We're good to go. Let's jump in. Let's not waste any more time. So first of all, today we're going to talk about Bitcoin whales, what they're doing, how they're withdrawing, the Ethereum burn, and how TradFi is noticing that burn. We've talked about Stripe, Fiat on-ramps to crypto, Bitcoin 64K target from an analyst, a little bit about Uniswap, Pepe, Sui, relative valuations, daily active users, fully diluted market caps, etc. Stuff you need to know if you're in the markets. And we're going to talk about banking Armageddon and how it's happening. Some really, really scary statistics there as well. So let's go. And I just want to say that this is the craziest time in my life. I've been well over 50 years old on this planet, but I've never seen such a financial disaster brewing. So please subscribe if you want to protect you and your family. There are things going on that are just absolutely terrifying, and the pace of change is terrifying. And I'm just this objective guy on the internet, no agenda but to help others. So hit that like and subscribe if you haven't. And I rarely ask for that, but this is just too important. And of course, now this is financial advice. First, let's talk about Bitcoin. We'll jump into some things here. Again, we saw huge withdrawals yesterday, 6th biggest Bitcoin withdrawal from exchanges so far this year, $250 million. And whales were driving the outflows. A big thank you to Stratton and thank you to Sanjay for sharing this with me. But this is massive. I did cover yesterday's video out of here, how the 10K plus whales are buying Bitcoin. Everybody else is flat or selling, which is stunning. And these guys, not only are they buying, but they're taking it directly off exchanges very fast. So that is a good sign that drives the whole scarcity. And always watch what the big players do. That is important too. Let's jump ahead. Let's talk about Bitcoin. I think the Swiss block guys and gals call it no man's land, but I call it no woman's land because we have some very powerful women here in the community. But Bitcoin here, per this chart, you see it's been consolidating in that range, that 27K to 29.5K now for the past 2 weeks plus. And there was a little bit of volatility today. That's obviously whales manipulating markets, wicking out margin longs and shorts. We shot down to, I think, 28.5. We're back up around 29K right now. And that's just the nature of the beast. They wait for the quiet times with low volume and then they strike. So be careful out there, everybody. And it's also a good time to snipe. But this consolidation period also coincides at the end of the month, which is typically when traders trade and take profits. Also, we had some interesting stuff, the Federal Reserve's interest rate decision. And here, again, we're stuck right in this middle zone. What's also interesting is you look at the on-chain volume and the trading volume. It's also very low right in this window. Now, it picks up when it goes down to the lower levels and the higher levels, but in the middle, it's kind of quiet. So you can use that to determine exactly when to strike. When you can tell when a period of volatility is coming as well in this simple little graphic. Now let's talk about Bitcoin dominance. We are still in that little red box that I showcased a couple of weeks ago. The Bitcoin top was confirmed again a month ago, and we still bounce up against that 48.5% Bitcoin dominance. It's exactly 48.49 right now as we speak. And it typically goes down from there, and then they all start rallying. We will talk a lot about a couple of alts today and some interesting things that are happening. But in other fun news as well, this is a new kind of target for the bull market. And this is a rare bull signal that has been flagged for Bitcoin's monthly chart. This was discovered by the Titan of Crypto on Twitter, and it's tied into the Bollinger Bands indicator, and it's setting up a repeat breakout event that has occurred only once in each cycle. Okay, this is rare, and typically it'll bring us to what he calls the first target. Now, the previous times that this happened was 2016, 2019, when Bitcoin broke through into the upper section of the Bollinger Band. So if you imagine that kind of light blue cloud, that's where we hit the upper band after the Bitcoin winter that we had. And the interesting thing about this is not only where it is, but how accurate it has been in the past. And we spoke about, I think it was on Tuesday, I spoke about some of the fib levels as well, and how they all tie into this. I checked as well, it does too. But what this does suggest is we could hit a target of 64,000 by early 2024. That could be between March and April. I was thinking, 42K would be quite probable, but this guy is slinging even more hopium. So I know it's 64K kind of isn't that exciting, but it just shows you what happens. 64K from 15K is more than a 4x. But when you're at 29K, it's just a little over a 2x. But that's the importance of getting in early, getting in hard, and taking advantage of the peak of buying opportunities. But even buying under 30K, many people believe, including Titan Crypto, it's a good opportunity. Let's switch gears and talk about ETH for a second. Ethereum saw a significant decrease in supply this week. 37,600 ETH were burned. And this is due to the fact that 90% plus of Ethereum gas, which is transaction fees paid by consumers, are burned. And while a small portion is paid out to validators as a form of tip. And this deflationary pressure could have positive impact on the price of Ethereum in the long term. Again, you can see the current supply, 120,361,800. And although that 37,006 is a small spit in the bucket, but it's substantial in the space of a short period of time. And this is interesting for a number of reasons, because people want things that are hard, not inflationary. We hate inflation here. We hate debasement on this channel. But if we look here, this has gotten the attention of TradFi. And of course, as ETH has become increasingly deflationary, some people call it ultrasound money. Obviously, the burns, etc., the activities with meme coins, NFT platforms, stable coins, etc. I think about 380,000 ETH have been burned this year. And this has gotten the attention of Goldman Sachs. And they like deflationary pressure because they know that number goes up when that happens. And they also noted that the asset's value is a function of many factors. Not just that, but having a deflationary asset is a big, big deal. So TradFi is getting interested in what's happening with crypto. And I will talk a bit about the relationship between TradFi and what's going on in other markets, because that does impact Bitcoin. And we'll look around what's happening all over the world too. In addition, let's look at the biggest burner of the gas. And by the way, if you go to Twitter, you'll find many people complaining that Ethereum is unusable because the gas fees are high again. But hey, when you got to trade a meme coin, maybe you just gotta do it. So this is from Artemis. And they said that the increased gas fee is all due to DeFi, and most of it is due to Uniswap, that big green block there. And guess what the primary culprit is of this gas use? Anybody? Anybody out there? Yeah, it's not a dog, it's a frog. So this is driven by, slides out of order, this guy here, Pepe, and a lot of people are super, super excited. I'm going to pull this up. Slides were out of order. On the weekends, I'm alone. But here, this is from the Minister of NFTs, and people are saying that if you put $100 into Pepe 2 weeks ago, you could have retired. Well, no, not really. But people are definitely going nuts over this meme token. And it did shoot up. But, even if you put $100, $200, it's not going to be life-changing. So this is what the chart actually looks like. The Pepe action, if you had nailed the very first launch bottom price and sold at the very, very top, you would have made exactly 2,000%, which is 20x. So if you put in $100, you have 2,000. So that is not life-changing by no stretch. It's fun, but it's not going to help you retire. So don't get too excited out there. Make sure you do the math. And the gains are now at 1,500 because it's come off that 2,000% gain, now down to about 1,500%, 15x, which is still very, very good. But this meme coin has grown to a 1.4 billion valuation and driven a frenzy, absolute frenzy of GRQ people, get rich quick, jump in, FOMO. And that has triggered a huge amount of activity on Uniswap, which has triggered a huge amount of ETH burning. See the way it's all kind of related? It's fascinating to watch. Let's talk about some other coins right now as well. So a lot of excitement this week. Sui went mainnet. A lot of people call Sui the Solana killer, kind of like Aptos and others. But this is just a quick reflection from, I I can't remember the Crypto Magazine, I think it was, and they showed the performance since January 2021 of different assets. Avalanche 352%, Solana nearly 11x, 1100%, Bitcoin down 11% since January 2021, and Ethereum up 140%. So that's super, super interesting perspective. And the reason some people like things like altcoins is they can do a lot better than the bigger assets. But let's dig into Sui and look at some other numbers as well. So I put together all the fully diluted market caps. This is basically for the amount authorized, you'd imagine, in the equity world of cryptos, and based on the current price. And what's stunning is if you look at this particular chart here, and the message here is everybody do your homework, look at the numbers. But Sui is now trading at a fully diluted market cap of $13.5 billion. The only one in this category, of course, I excluded Ethereum because that's so much bigger, but is the fully diluted market cap of Cardano is bigger than Sui at $17 billion. Aptos, $9.4 billion. Aptos was $12 billion not too long ago, but they come back down to earth. Avalanche, $12 billion. Optimism, $7.8 billion. Arbitrum, $12.4 billion. Matic, $9.6 billion. And Solana, $11.7 billion. Fully diluted, not today's market cap. But what you want to do is find a market cap that's close to the fully diluted market cap. Otherwise, you will be suffering from dumpage for the foreseeable future. And that's the real issue. But what's even more important is to look at a ratio that I look at a lot, and that is the fully diluted market cap divided by daily active users. How much market cap is there for every user of the chain? And that is stunning, ladies and gentlemen. And I did the math for you all. Currently, Sui is trading at about $3.2 million per daily active user. Everybody, Aptos is over nearly $1.1 million per daily active user. Cardano, $361,000 per daily active user. Avalanche, $195,000. Optimism, $161,000. Arbitrum, $60,000. Matic, $33,680. And the cheapest of all is Solana at $20,000 per daily active user. Remember, if you look at traditional metrics like how Facebook values themselves, is based on daily active users. Same thing like Twitter. They are the source of revenue generation in the future as we go forward. So anybody thinking of buying Sui at this price, it's not going to fly. Unless, of course, they can build up, 600,000 daily active users, which is what the bottom one here on this list has today. Now let's talk about some other stuff. Everybody's worried about kind of on-ramps, fiat on-ramps, so they can buy crypto. Stripe is a global payments platform. We use it here at IA, and they announced the launch of a fiat to crypto on-ramp. And this will help many people deal with problems because their traditional banks sometimes shut them off. And this service will allow users to buy crypto, such as Bitcoin and Ethereum, using credit cards or debit cards. And the on-ramp is currently available in the US, and Stripe plans to expand it to the rest of the world in the near future. Now, I know people in the UK were complaining a lot about not able to use their traditional bank like Santander, etc., or HSBC to buy crypto, but this may overcome that. I don't know. I'm sure the fees will be substantial, but it's better to have an on-ramp than no on-ramp. And this will make it a lot easier for people to buy crypto and opt out of the existing fiat system. And Stripe is a very well-trusted brand out there as well. Let's look at what's happening. Now, the reason I'm going to talk a bit about banks is because what's happening with the banks is fueling Bitcoin and crypto. People are looking for alternatives. A lot of things all happening at the same time. You got banking crisis, you got empty money supply crashing down, you have disruption in geopolitics around the world, and a ton of other things, crazy interest rates. But this is all triggering an absolute Armageddon, and I'll walk through exactly why that is. But for fun, we took the US Regional Bank Price Index priced in Bitcoin. This is the KRE ticker, which is all the regional banks in the US divided by the price of Bitcoin. And the question is, what would you like to own? And obviously, we're seeing that little double bottom right now, but it has just been absolutely ugly. These banks have been destroyed, especially as we start pricing things in Bitcoin. Even the chart standalone priced in US dollars is horrific. So very, very scary time. But again, start thinking of pricing things all in terms of Bitcoin. Now, Jerome Powell and the Fed decided to squeeze the banks and the economy even more. Let's burn this thing to the ground. And the Fed's roadmap remained unchanged, but people do believe that was the last hike. Remember, it was another 25 basis points. That means they've gone up 21 times. Before they started the hiking cycle, which was middle of 2022, 2021, I can't remember, it's so long ago now, but they've raised it at 21x, which is stunning. And now the forecast is for them to pause next, and then something will really smash and break. And let me give you some examples in a few slides as well, what will actually break. And the other thing, the most important thing to focus about is the pause in interest rates is a precursor to a pivot when they cut rates. And that typically puts risk assets up. But it depends on the circumstances. There can be certain circumstances that causes a cut, but it can be catastrophic from an economic nature. So beware of that. So a natural pivot is good. A forced one is not good. So we need to watch actually as to what's going to break. And let me give you some examples. But before we do, there's some good news. There's a growing list of US politicians that are taking a stand against central bank digital currencies. We know they're coming, and they're also pro-Bitcoin. So another feather in the cap of Bitcoin. This guy is Robert Kennedy Jr., comes from a very big, historic political family, and he expressed support for Bitcoin while criticizing central bank digital currencies. He was on the All In Pod yesterday as well. And Kennedy believes that central bank digital currencies will give the government too much power to control economic life and suffocate dissent. Basically, no freedoms. And I really like that. I thought it was very, very important to share because we've been saying that central bank digital currencies are there for financial slavery and, of course, political tyranny. It's already happening. We have it even without the central bank digital currencies, but it gives them so much more power. So let's hope folks like this will get that message out and get elected. And, even if these people get elected, maybe they'll change their mind and say, well, we're going to a CBDC anyway, because we have to, because we need to have that great reset because we've got way too much debt. So net, all roads, as I say, lead to Bitcoin, but this is a positive. In addition, I have been talking about financial Armageddon for quite a while. Banking Armageddon is happening. So if we go back to the big macro thing, like Janet Yellen just discovered they've got no money in the kitty. They were hoping they'd have cash until August. They're going to run out by June because they just figured out that tax revenue is not what they expected to be. They've been saying for a long time, since last year, that because the market sucked, 13 to 15% of all tax revenue is tied to capital gains from individuals. Forget all the rest. That was also down because of a bad year. But again, a huge tax shortfall, which means a huge deficit. I reckon the US will be 2 to 2.4 trillion this year. But what's interesting about this one, some experts believe that the turbulence in the industry is coming to an end. But no, I do not. We have the rapidly rising interest rates, which will create perilous conditions for banks because assets that banks hold on to generate a return on their investment fall in value when interest rates rise. That is the problem right now. And the US banking system's market value of assets is around 2 trillion lower than it was and lower than their book value. And half of Americans' 4,400 banks are estimated to be burning through their capital buffers and are potentially insolvent. I will repeat that. Per this professor from Stanford, he believes half of all the US banks are insolvent. And we haven't even had the CRE nuke yet, the commercial real estate nuke. So these smaller banks, regional banks, control 70% of lending for commercial real estate. All their deposits are gone. They can't refi the 70% of commercial real estate. And that's going to not only blow up the CRE market, but also the banks. And that's a big problem. That's just one other nuke that isn't even factored in yet. So in addition, this just popped in literally right before I started. This is from Reddit. And it said, it is spreading. This is why Bitcoin was invented. So banking fears spark nearly £5 billion of withdrawals from the UK. This is a record, despite the so-called FSCS. I'm not even sure what that is. Maybe it's a UK thing or whatever. But the point is, the British folks are worried about their bank deposits. They're draining their banks too. And then the French will worry about their French deposits, and the Germans and the Scandinavians and the Dutch and everybody else. This is just spinning out of control really fast. This is not idiosyncratic, and this is not isolated to the United States. In addition, some more detail on this, the number of banks shrinking. And again, for those saying, why is he talking about Bitcoin? Because this is about Bitcoin. Where do you think the money is going? So the number of banks are shrinking. Oh, excuse the typo, everybody. But the deposits are going to JP Morgan. And this is the number of banks, the consolidation in the banks from Statista. We had 15,000 banks in the late 80s. And then it went down to early 90s. I remember it was over 10,000 banks. Now we have 4,135 or 4,400, depending on who you ask and what types of banks they are. So it's shocking. And this is a little table I put together. The total assets per bank, the average deposit per bank. So if you look at that 4,000 plus banks, you have the top 10 control 2/3 of the money. Just 10 banks. The other 4,200 have an average deposit of 1.2 billion. And they have 5.1 trillion between them. And that is stunning. And this is what this looks like in a chart of how they are shrinking. You've got JP Morgan, 16.4% of all, Bank of America, 13.7%, Wells Fargo, 10%, and Citibank, another 9%. These four banks have half of everything. Then the next six have the other, 20%. And then 4,200 randos have the balance of 35%. And this is only accelerating. The drainage has not stopped. And there's going to become a time when things are going to break. But there's something else going on too. Now, I haven't been able to vet this, but if you look at this article here from Planet Today and a couple of other sources, apparently JP Morgan holds massive gold derivative short position that could be larger than the bank's total assets. So I'm not a gold bug, but can you imagine, everybody? And this tinfoil hat well attached, but I always try to think of what's going on behind the curtain that we don't understand. Imagine a scenario where these guys are about to face a huge margin call because they're short gold. Gold hit an all-time high last week as well, by the way. Maybe they're getting squeezed. Maybe that's why they need the deposits from the other banks to be able to cover that margin call. Far-flung theory, but we do know that JP Morgan has been manipulating the gold price for decades, and they've been penalized many times for decades. But that would be huge. Imagine if JP Morgan blows up. That would be truly a financial Armageddon. But interesting how everything is connected. You know, Bitcoin is considered digital gold. Gold is the one here that they're trying to short, and their position could be larger than $2.4 trillion. I'm trying to find out if I can get the truth behind this, but if that is the case, the more gold goes up, we should all go out and buy gold just to squeeze JP Morgan. Anywho, and this is one other quick illustration as to see exactly how small the other deposits are on average for the other 4,200 banks and how much is actually within the big guys, especially the big four. Just another visual so you know what's going on. Now, a lot of people also believe, this is from the Bitcoin Layer magazine, that bank nationalization is underway, where everything will go to the big four money banks because a great reset is required, etc. So this is kind of scary. Hello, Brocade, I see you out there. But I don't know if that's the case. But all I do know is the hierarchy of money is based on safety and liquidity. And Americans realized a lot of things in early 2023. And now the British are realizing stuff as well. They had their scare last year with the pensions. This year with the fear around banks. Again, this dramatic rise in interest rates is smashing everything. Traditional bank deposits are fleeing the banks, and banks will not be able to lend out any money. There's going to be a huge credit crunch. This is kind of a scary, scary time, all driven by high interest rates, which drove the deposit flight, and here we are. Either way, I've never seen anything like this, and something scary is going to break for sure. Now, let's talk about the control. That's what these people are doing. Now, this getting back to Bitcoin news for a second. I put a little soccer ball in there because I know Argentina are very good at soccer, but unfortunately, they lost this game here. This title says, Argentina's central banks bans financial institutions from offering Bitcoin. I wonder why that is. Well, we know that Argentina got a loan from the IMF, and the IMF wrote language that you have to block Bitcoin if you want this cash. And the central bank of Argentina banned Bitcoin and other digital assets for the entire financial sector. And the measure will force many popular fintech apps in Argentina to remove digital assets like Bitcoin, etc., from their platforms. And I'm not sure exactly what's happening with peer-to-peer marketplaces, but that is stunning. So IMF won that battle, but I'm sure these fintech companies will probably go offshore, move somewhere else, or create a DEX or black market for people in Argentina to get access to Bitcoin. Because with their inflation rates, they need it probably as much as anybody in Turkey, Lebanon, etc., as they go forward. So, and I do have some audience members here from Argentina. So hello, everybody. And final news, a little bit of AI news, which is interesting this week. Just the big stories of the week that kind of impressed me the most or shocked me the most. This is the TV and Film Writers Guild of the United States. They write movies and TV and stuff like that. They are fighting to save their jobs from AI. Apparently, I don't know why that person had the Alexa will not replace us. AI is far more than Alexa right now. But that was the picture in the newspaper yesterday. So the question is, they are obviously very concerned about ChatGPT. They want it blocked. They want to protect their situation, their jobs, etc. And the question is, could AI write a piece like Casablanca or a new TV series or whatever else? And the answer is maybe not the current version, but future versions probably. So everybody's getting nervous, but they shouldn't attack and block it because you can't put toothpaste back in the tube once it's out. That's what I've been saying for 2 years now. And this is a big issue, and this is impacting many industries. So we'll see what happens. Hope there's no writers out there. I think they can get better at writing if they leverage AI the proper way. But to turn your back on it and pretend it doesn't exist is just dangerous. So with that, everybody, thank you so much. Happy Saturday. Happy Sunday to those in Australia and other places. This was what happened this week. I hope you like the content, recapping everything as well, and some scary times out there. So let me see. I hope anybody in Argentina out there, make sure they're okay. Hey, Benny, thank you, T&D Tesla, for all you do. And I'll see you all tomorrow for the live Q&A. That will be around noon Pacific tomorrow. And it's a big, big show with all the top questions you guys had from the last week in deep, deep detail. Let me see. Benny, I would leverage the AI for sure. It isn't even that hard for them. It's probably a mental step more than anything else. Exactly. You have to, when there are something that threatens whatever it is that you have to embrace it and leverage it, make it work for you. And that's exactly the right approach. Thank you, Benny, for that. We have somebody, Cybertooth Tigers, up early in Australia. So, and I miss you all. See you all tomorrow. Have a great weekend. Bye.